Spain, like many other countries in Western Europe, has a reputation for high taxes. But if you're in Spain by choice or otherwise and you want to lower your tax burden, in this video I'm going to tell you about a range of different ways that you can do so legally. Let's get right into it. If you're new here, my name is Jonny. I'm originally from the UK, but I've been living and working in Madrid for the past 5 years. On this channel, I talk a lot about life in Spain, a lot about the financial aspect of living in Spain, investing, saving money, as well as sharing my travel experiences as well. Now, quick disclaimer before we get started, nothing that you hear in this video should be taken as tax advice. Tax is very personal and it's very unique to every person, so it's really important that you consult with a professional before making any decisions that impact your taxes. And if you are looking for a professional who can help you with your taxes, then be sure to check out the link in the video description to one of my partners, Pro Spain Consulting. They'll be happy to take a look at your situation. Now that's out of the way, let's get into the video. So let's talk a bit about Spain and its tax system. Looking at statistics from EU countries and their taxation compared to GDP ratio, Spain actually falls round about the EU average, just a little bit below it based on 2022 data, with some of the leading countries being France, Belgium and Norway. However, an IEE report published the same year ranked Spain 34th out of 38 countries that were assessed on tax competitiveness. And the report specifically mentioned Spain's increasing fiscal pressure on taxpayers by increasing tax collections rather than trying to increase tax revenues through increasing the tax base or fighting against tax fraud. And it's on that note that we start the video with a hard truth, which is that it is quite difficult to lower one's tax burden within Spain. There's very little room to maneuver within the Spanish tax code to be able to do so legally. That said, it isn't impossible. There are different ways that you can lower the tax burden to different degrees. And if you are living in Spain and are Spanish tax resident, then I think it's worth listening to these things as well, because they can somewhat lower the tax burden that you'll face. And just before we get into the ways that you can lower your tax burden, let's have a quick recap of who is a Spanish tax resident. So Spanish tax residency is based on two criteria, one being the amount of time you spend in the country in the tax year, which runs from the 1st of January to the 31st of December. Anybody who spends 183 days or more in Spanish territory during the tax year is generally considered a Spanish tax resident. And the second criteria that can make someone a Spanish tax resident is if it's determined that their center of vital interests, whether that's family ties, economic activities and interests, are based in Spain. That can be something else that makes someone a Spanish tax resident. So generally speaking, if a person meets one or both of these criteria, they'd be considered tax resident in Spain and would be liable for tax on their worldwide income. And so with that, let's get started on some of the ways that you can lower your tax burden in Spain. Now, the first way you can lower the amount of income tax that you pay in Spain is through charitable donations. So if you're someone who regularly donates to a charity or a religious organization like the Catholic Church, for example, any donations you make to these organizations will give you a certain percentage of deduction on your taxable income. Up to 250 euros in donations gives the taxpayer an 80% deduction on their taxable income, and anything above that gives a 45% deduction on their taxable income. So to give you an example, let's take someone who makes 30,000 euros a year. This person gives 250 euros to a charity of their choice. They would essentially only pay tax on 29,800 euros, because they would get the right of an 80% deduction of that 250 euros, which lowers their tax base by 200, which is 250 times 0.8. The next way you can lower your tax burden is through loss harvesting on your investments. So when it comes to taxation in Spain, the tax paid on dividends and capital gains through the sale of stock at a gain or a loss, for example, is different from your employment income, and it's taxed on a separate scale. And that progressive scale essentially starts at 19% and goes up to 30% depending on the total amount of capital gains or dividend income that you've made through the year. What you're also allowed to do within that is roll over losses for up to 4 years to offset any gains in future years. So let's make a simple example here. Let's say in the current tax year, I make an overall loss of 1,000 euros on the sale of assets, stocks, funds, whatever. And I leave it there, I don't use it this tax year. Let's say in the next tax year, when I consider all of my dividends, my capital gains, my total gain comes to 7,000 euros. Now that first bracket, the 19% bracket, ends at 6,000 euros, and anything above that would put me in the next bracket, which is 23%. So what I could do here to lower my tax burden and prevent me from going into that 23% bracket is to use my 1,000 euro loss from the previous year to offset the gains in the future tax years, essentially bringing me back down to 6,000 total gains and reducing the total tax that I'd have to pay on my net gains. Next way to lower your tax burden is something that a lot of people talk about for new foreigners and expats moving to Spain, is the Beckham Law. Now, the Beckham Law is essentially a scheme that allows people who are moving to Spain who haven't been tax resident in the past 10 years to benefit from a special flat tax rate of 25% on Spanish-sourced employment income up to 600,000 euros. And on top of that, any non-Spanish sourced income is exempt from income tax. So you can see how that's very beneficial for a lot of people who are moving to Spain who perhaps have income in other countries, or in the case that someone is moving to Spain and they have a particularly high paying job, that can also be beneficial for them as well. Having played around with the numbers a little bit, from my own assessment, the Beckham Law starts to become beneficial around the 45k mark. So if you are earning around that, or you expect to be earning that at some point within the first few years of you moving to Spain, then the Beckham Law can be something worth applying for, because that exemption can essentially be applied to you for up to 6 years. And that can of course give you significant tax saving. On the other hand, if you're not a high earner and you are eligible for the Beckham Law, then it doesn't mean necessarily that you should take it, because it may be that you do pay less tax not taking the Beckham Law, because you're not really at the threshold where it might make a difference. I'm going to take you over to Excel now and show you an example of how the Beckham Law can change somebody's situation. So I've got an example on the screen here. Basically, let's say that someone is making 150,000 euros of income in Spain and is eligible for the Beckham Law. We're going to take a really high tax autonomous community like Catalonia for the example's sake. And again, for the sake of simplicity here, just assuming employment income from Spain here. So if this person was making 150,000 euros a year living in Catalonia without the Beckham Law, they would be paying around 56,000 euros in tax, which would be an effective total rate of 37.2%. However, if we apply here the Beckham Law, we can see that goes down to 35,000 euros and an effective rate of around 23.3%. So you can see here how in the case of high earners, this can really make a difference, and it can save you thousands. And in the example that we've seen here, that's a 15,000 euro difference in tax that someone would pay thanks to the Beckham Law. And that's before we're even considering if this person has income coming from abroad as well. When it comes to who can apply for the Beckham Law as well, it is only really specific profiles that are eligible. So again, worth checking with a tax advisor to make sure that if it is something you're interested in pursuing, or it's something that could really be a deal breaker in you moving to Spain, then it is worth talking to a tax professional before moving to understand whether you'd be eligible for it as well. All right, the next way you can lower your tax base is through pension plan contributions. Now, if you follow Spanish politics at all, you'll know that public pensions are a very hot topic, and the strain on them and the need to maintain them is something that is constantly on government agendas. And so as a result, there are tax incentives that exist that promote essentially individuals contributing to private pension schemes. And so how it works essentially is that you as an individual, you can contribute up to 1,500 euros per year to an individual pension plan. And that 1,500 euros, the same way that we talked about in the charitable donations example, can be used to lower your tax base. So for example, someone earning 30,000 euros who contributes a full 1,500 euros to a pension plan will be able to lower their tax base and pay tax only on 28,500 euros. And so let's have a look at another example in Excel to see how that works in practice. So we'll say that this person earns 30,000 euros. And so on 30,000 euros, assuming they live in Catalonia, they would be paying tax on a base of 26,000 euros. And therefore they would owe an approximate 5,150 euros in tax, being 17.2% effective rate. Now, if we say this person contributes 1,500 euros to a pension plan, then their tax base lowers by that 1,500 euros down to 24,500 euros, 24,600 euros. And they'd essentially be paying 4,700 euros in tax, which is 15.7% effective rate. So you can see that is a saving of 400 euros in tax through those pension plan contributions. And you'll see that the further up the income scale we go, that the saving gets bigger. So now let's take a person who makes 60,000 euros in income. So before pension plan contributions, they'd be paying 15,000 euros in tax, approximately 25%. If we add on those 1,500 euros, this person will be saving almost 600 euros in tax because of the higher tax bracket they're in. So the further up the tax brackets you go, the greater the saving is for those pension plan contributions. And so that's how you can lower your tax base from an individual contribution perspective. There's also through the employer contribution as well, which can further lower your tax base. So on top of those 1,500 euros, if your employer has a scheme where they are matching or they are contributing an amount in addition to your contributions, then those employer contributions can also be used to lower your tax base even further on top of whatever it is you've contributed. And the limit for employer contributions is much higher than for individual contributions. It's up to 8,500 euros in the case of an employer. What you do need to keep in mind when it comes to pension plans though is that whilst this gives a tax exemption in the short term, it is essentially a deferral. So you will pay tax on that when you withdraw from your pension plan, whether that be out of needing to access the money or because you retire and it's time to access the money. You'll essentially pay tax, one, on the contributions as employment income essentially, and second, you'll also pay taxes on the capital gains, any capital appreciation that's happened over the time that the money has been in that pension plan. And so when the time comes around to withdraw from a pension plan, it is worth considering the timing, whether it's the right time to pull it out, as to whether it would push you into a higher tax bracket as a result of that on the employment income part of it. Obviously the capital gains kind of depend on where the market goes and kind of is what it is in that sense. By the way, guys, if you found that Excel sheet helpful that I used to demonstrate how the Beckham Law and pension plans can reduce your taxes, and you want to put in your own numbers, see what your tax situation might look like in Spain, then this is a downloadable file. You can download it from our store, link in the video description, if you want to do it and run your own numbers. Right, the next way you can potentially lower your tax burden if you're married and living in Spain, potentially by submitting a joint tax declaration that can potentially lower your tax burden as well. Now, as a married couple, there are deductions ranging from 2,150 euros up to 3,400 euros on the taxable base for a joint declaration. I think the cases where it's worth taking advantage of this are if you have, quite significant differences between your two incomes. If someone earns more than the other person, then it can be worth considering that. Or if one person works and the other one doesn't, then it can be worth considering, as this can potentially lower your overall tax burden. If you're earning similar kind of money and you're especially high income earners, then perhaps it's less beneficial and it might make sense to file taxes individually in that case. But as I say, it's very personal. It depends on your situation. It's really important to check this out with a tax advisor. And the last way to lower your tax burden in Spain is by choosing carefully which region of the country you move to. Because Spain is a country of 17 autonomous communities, these autonomous communities have some devolved power and taxation falls somewhat within their remit. So on the employment income scale, whereas half of it is made up by a set of standard central government rates, the other half is determined by the autonomous communities. And in addition to that, the concept of own taxes, known as impuestos propios in Spanish, are also managed by the autonomous communities. This is where things like wealth tax, inheritance tax, garbage or rubbish tax comes in, and how much the autonomous communities want to collect, if they want to collect those taxes, very much depends on them. And so as a result, you've got regions of the country like Madrid where the income tax scales are much lower than in the likes of the Valencian community or Catalonia, for example, where they're much higher. In addition, in Madrid, you've got a 100% exemption on the wealth tax under normal circumstances. Currently, there's a government decree in place which overrides that. You've also got significant exemptions on donations and inheritance, particularly when it comes to first degree family members. That's not so much the case in Catalonia, where there is a wealth tax and there's quite high inheritance and donations taxes, and that can really, make a difference. And so someone with the same assets and same income in Madrid, for example, would much likely pay less in tax than they would if they lived in Catalonia as a result. We've also got the autonomous communities of the Basque Country and Navarra, which essentially have their own tax systems separate from the rest of the autonomous communities, and they have full autonomy over their tax systems. And in the case of the Basque Country, I believe it is a pretty beneficial tax system as well. In any case, if you do want to see how taxation varies by autonomous community, then be sure to check out this video where I cover it in a lot more detail. All right, so now that we've covered how individuals can lower their tax base, what about how entrepreneurs, businesses can potentially lower their tax rate in Spain? Well, the first way is a pretty common theme based on whichever country you're set up in, and is based around the idea of whether you're registered as a self-employed person or whether you're going to do business through a limited company. known respectively as autónomo in Spain and as a sociedad limitada in the case of a company. Now, as one might expect, there's a lot more bureaucracy involved and a lot more costs involved with running a limited company in Spain. You're going to have to make regular tax declarations, VAT declarations, all this kind of stuff. You're going to have to pay a gestor or some kind of accounting software, which in the case of a company will almost certainly cost you more than it would if you were to do it as an autónomo, which would be significantly less bureaucratic, for whom accounting typically won't cost you as much as it would to run for a company, and generally speaking as well, there's a lot less bureaucracy involved. However, as an autónomo, as all of the profits from your economic activity are attributed to you, a physical person, you'd essentially be paying tax on the same income tax scale as employees would pay it on, for example, meaning that if you're making a lot of money, then you're going to be paying some of those very high tax brackets, and therefore you'll be paying a lot of tax on the money you earn. So then there'll logically come a point where you'll start asking yourself, is it worth moving over to a limited company? So an autonomo with a higher income, for example, may potentially save on tax through retained earnings and paying corporate tax at 25% or even as low as 15%, at the start of the activity, through keeping retained earnings in their limited company. They can also determine what their salary is that they take from the company. They may also be eligible to distribute dividends from the company as well, which aren't taxed the same as employment income. Of course, very important to run the numbers carefully, look through it with a tax professional. But if you are an autonomo with higher income and you're starting to hit those, 40-45% tax brackets, then it may be beneficial to look into doing business through a limited company rather than doing it as a self-employed person. Another way that businesses and entrepreneurs can significantly lower their taxes is through a little known scheme that exists in the Canary Islands, known as the Canary Special Zone, or the Zona Especial Canaria, or ZEC in Spanish. And the tax advantages that come with the Canary Islands company are incredible. We're talking as little as 4% in corporate tax, with potentially up to a 90% exemption on corporate profits for what you're paying. In addition to that, when two Canary Island companies are doing business, then there's an exemption on any transfer tax on transactions, and also actos jurídicos documentados, which are like fees that you have to pay in the case of legal documents, and the transfer tax, in the case of the sale of assets, for example. So an incredibly attractive scheme, but it does come with a lot of conditions, such as a minimum amount of capital required to set up that company and invested in the Canary Islands. You also need a minimum number of workers who are based in the Canary Islands as well and carrying out their work from the Canary Islands in order to be eligible for the benefits of the special Canary Island company setup. There you have it, guys. I hope you found this video interesting and helpful, and I hope that it can help you to lower your tax burden in Spain as well. Leave a comment and let me know if you knew about any of these, or if there are any of these that you've been able to apply in your situation. And if you like this video and you want to see more about taxation in Spain, or even just about life in Spain in general, then be sure to check out these two videos here. The next time, I'll see you on the next one, and let's get this money.